Dobson here, and before I get started, a disclaimer that this should not be construed as legal advice. But recently I saw a post that shared that the use of DBAs instead of starting a new company is often the best way to diversify. And so here's my opinion on that statement. Now, after working with hundreds of profitable small business owners, asset protection is a major priority in planning for sustainability and growth. And I never like to use blanket answers when it comes to tax and business because most all answers really depend on your individual facts and circumstances. But I can say that I disagree with this statement more than I agree with it. So first, is it possible to form one LLC and create multiple DBAs to separate different business activities within that business? Absolutely. And it's also great to have insurance, and in most businesses you are required to have some sort of insurance in that business. But insurance companies are businesses, which means their goal is to make a profit. They will try to find ways to not pay the claim or be liable for only a portion. Then what's next? The attorneys for the other side, they're going to look to your business assets. So therefore, reliance on insurance alone for your business asset protection without doing your part through business structure could rise to the level of really having an effect on your business if ever sued. So here's some things to think about when you are considering owning and operating new businesses under one LLC for brand consistency purposes or whatever reason. So diversification. So back to what the initial post said, that DBAs are often best used to diversify. The definition of diversify is to make diverse or composed of unlike elements. So a question to ask yourself is, if I'm looking to diversify or add different products or services to my business, is it best to place all these activities under one house, exposing each product and or service to liability of the whole? So here's a tip. Always weigh the risk and similarities of each business activity to determine if a new entity should be created. So next are your accounting and books. And it could seem easier to have all services and products under one entity, but keeping expenses related to each DBA could be a nightmare. And this could require you or your bookkeeper to enter each expense when incurred into your accounting software, because going back to remember which business activity applied to which expense really could be difficult if you wait, if you're not on it every single day. And remember, it is your responsibility to keep accurate books and records. So accuracy would mean that you are able to identify expenses related to which business activity. And in case of an IRS audit, they will want to inspect those books and records. And also remember your startup expenses. So when a business starts a new business line, all expenses that were incurred before the business actually started or actually starts are startup costs, and based on the amount of those costs could be limited and must be amortized over 15 years. And so that goes back to the accurate books and records. And using a DBA under one LLC could complicate your accounting and books. Next, let's talk about NAICS numbers. And so that stands for the North American Industry Classification System. And that is the standard used by federal statistical agencies in classifying business establishments for the purpose of collecting, analyzing, and publishing statistical data related to the U.S. business economy. And on your tax return, you must enter the NAICS number of your business or what's closely related to your business. So a red flag could be raised, increasing your chance of an audit if you are operating several businesses under one entity and you have expenses that are unrelated to or grossly in excess of the industry your NAICS code relates to. You can enter in, and you can only enter in one NAICS number per LLC on your tax return. But in case of an audit, by properly identifying and substantiating your business expenses would result in a positive outcome. But who wants an audit? So here's a tip. Keep accurate books and records, and the use of DBAs could increase the chance of an audit, especially if you are operating an LLC taxed on Schedule C, because all of your expenses grouped together on its appropriate line of that Schedule C could raise a red flag, because the total of each line on that Schedule C could exceed the industry standard based on that NAICS number used to identify your business. So next, on the maintenance fees and paperwork. Creating new entities does require maintenance fees and paperwork, but these are 100% deductible within reason as a business expense. So you will need to pay to incorporate or form another LLC for each business, as well as any maintenance fees or forms to the state. And you may also need to file a separate tax return depending on the way you're structured, but there is a way to form your companies where only one tax return will need to be filed for that family of companies. And for some entrepreneurs, all this separate paperwork can be a pain, but for others, the added fees are well worth it in order to protect each individual business from the others. So it's something for you to weigh. And I can keep going, but I wanted to keep this as short as possible. But I'm going to stop. But there are other considerations, but I will end with an example. So let's say, for example, Chris owns KO Cuts LLC, which is a barbershop. And he starts a car wash business doing business as KO Cleans, a lawn care service doing business as KO Cuts Lawns, and he purchases 2 rental properties, KO Cash Properties. Now, all 4 of these businesses are housed under this one LLC, KO Cuts. So if Chris comes to me, and of course I'm assuming other facts, in this scenario, I would advise Chris to organize separate LLCs, because each business has its own distinct set of risks, and they are just totally different businesses. And it's also never a good thing to own real estate in your operating company. Now, the bottom line is there's no legal limit to how many business ventures you can start and run, but just make sure that you properly account for your liability risk when structuring these ventures. So if you need any assistance with business structuring or restructuring, or even if you're going to start a business, you can schedule with me. My link is in my bio. Schedule a free strategy session, and we can go over what your goals are, what type of business you're starting, if you're already in business, if it's a good thing to go ahead and create a separate business, or is a DBA a good move for you.